if you lend money to somebody and it comes due and they can't pay, the old story about the banker, I never made a bad loan. Of course, some of them turned bad after I made them. I mean, and that's exactly what happens in, whether it's in commercial real estate. And if money rates are 2%, or we were lending money out at 4 basis points at Berkshire to the...
Don't miss out on the booming real estate opportunities that could make you wealthy in a post-inflation world. As the market shifts, savvy investors are capitalizing on trends you can't afford to ignore. Discover how rental income and sustainable properties can secure your financial future today. Suburban shift and demand for space. In a post-inflation world, the demand for suburban properties is growing. The COVID-19 pandemic triggered a major shift, with families and individuals moving away from crowded urban centers in search of larger homes and more space. According to a report from nhcno.com, this trend is expected to continue into the 2025s, as more people prioritize comfort, outdoor areas, and home offices. Investors who focus on suburban real estate can take advantage of these evolving preferences. As remote work becomes more permanent, the need for spacious, quiet homes outside city limits will likely stay high. Adaptation of commercial real estate. The commercial real estate sector is facing its biggest challenge in decades. The shift toward remote work and hybrid models since 2020 has significantly impacted the demand for office space. As companies increasingly embrace flexible work environments, the traditional office layout is being reconsidered. More businesses are downsizing their office footprints or opting for co-working spaces instead of large, permanent office locations. This has opened up new opportunities for investors to repurpose commercial properties. Offices are being transformed into mixed-use spaces or flexible workspaces that can adapt to various business needs. Properties in key urban locations are now being reimagined to cater to a blend of retail, office, and residential functions, which increases the overall value of the space. Experts suggest that the future of commercial real estate lies in flexibility. Buildings that can quickly adapt to changing needs will be the most valuable. Investors should consider properties that offer more than just office space, those that blend residential and commercial uses, or provide spaces that encourage collaboration and community are where the market is headed. In a post-pandemic world, the commercial real estate sector will need to embrace change in order to thrive, and savvy investors are already positioning themselves to benefit from this transformation. E-commerce growth and industrial real estate. The explosion of e-commerce, accelerated by the pandemic, has dramatically reshaped the industrial real estate market. 2020 marked a significant turning point for online shopping, as consumers increasingly turned to digital platforms for their shopping needs. This shift has sparked a growing demand for industrial spaces such as warehouses, fulfillment centers, and distribution hubs. Investors are keen to tap into this booming sector by focusing on properties that support the logistics of e-commerce. Locations near major transportation routes, ports, and airports are especially attractive. The need for faster delivery times has made last-mile distribution centers highly desirable, as companies look to reduce shipping times and costs. This surge in demand for industrial properties shows no signs of slowing down. In fact, experts predict that as more people continue shopping online, industrial real estate will remain a stable and lucrative investment for the foreseeable future. As technology continues to advance, the integration of automation and AI within warehouses and distribution centers will further enhance the efficiency of operations, making these properties even more valuable. For investors, the key is identifying the right locations and properties that can support the next generation of e-commerce logistics. By focusing on the growing industrial sector, you can capitalize on the future of retail and the global supply chain. Emphasis on sustainability and green building. As environmental concerns continue to grow, the real estate industry is placing greater emphasis on sustainability. 2021 saw a noticeable shift toward eco-friendly and energy-efficient buildings, with both investors and tenants prioritizing sustainability. Green building practices are no longer a trend, but a requirement in today's market. Sustainable real estate investments, such as energy-efficient homes and buildings with low carbon footprints, are becoming increasingly attractive. Properties that meet certifications like LEED, Leadership in Energy and Environmental Design, are seeing higher demand, especially among environmentally conscious renters and buyers. Not only do these buildings contribute to reducing environmental impact, but they also result in lower utility costs, which makes them appealing to tenants. Investors are also looking for opportunities to renovate older buildings, integrating green technologies such as solar panels, smart heating and cooling systems, and water-saving fixtures. This transformation is not just beneficial for the environment, it also offers long-term financial gains. Properties with sustainable features tend to appreciate in value over time, and their operational costs are typically lower, making them a smart investment. By focusing on sustainable real estate, investors are positioning themselves for success in an eco-conscious market while contributing to the well-being of the planet. Green building will remain a driving force in the future of real estate. Impact of interest rates on affordability. Interest rates play a pivotal role in the real estate market, and their rise or fall can dramatically affect property affordability. Since 2021, central banks across the globe, including the U.S. Federal Reserve, have raised interest rates in response to inflation concerns. As rates climb, the cost of borrowing increases, which directly impacts potential homebuyers and investors. For homebuyers, higher interest rates mean higher monthly mortgage payments, which can make purchasing property less affordable, especially for first-time buyers. This has led to a slowdown in home sales in certain markets as buyers hesitate or adjust their budgets. On the flip side, real estate investors might see opportunities in markets where prices stagnate or even decline, as sellers may lower prices to attract buyers in a higher rate environment. For investors, understanding the impact of interest rates is crucial. While higher rates might reduce affordability for some buyers, they also increase the cost of debt, which could affect leveraged investments. However, some investors are finding ways to hedge against rate hikes, such as focusing on rental properties where demand remains strong despite rising rates. Rental income tends to rise over time, helping investors keep pace with inflation and market shifts. The bottom line is that interest rates will continue to shape the real estate market. Investors who can navigate the challenges posed by rising rates will find opportunities to thrive in the post-inflation economy. Resilience of rental income. In a post-inflation world, rental income has proven to be one of the most resilient forms of real estate investment. As inflation continues to rise, the cost of living increases, and people are looking for more affordable housing options. This dynamic creates a steady demand for rental properties, making them an attractive investment. Since 2021, rising housing prices and mortgage rates have pushed many potential homebuyers out of the market, increasing the demand for rental properties. In fact, rents in many cities have soared, creating a significant opportunity for investors to generate consistent cash flow. Properties in desirable locations, close to work hubs, transportation, or entertainment, are particularly in demand. For investors, rental properties offer the potential for long-term wealth creation, especially as rents tend to rise with inflation. This steady stream of income can offset any dips in property value caused by economic downturns or market volatility. Additionally, the cost of maintaining rental properties, such as repairs and upgrades, typically rises at a slower pace than rental income, providing a stable margin. Rental real estate provides a hedge against inflation, making it a secure option for those looking to protect their wealth in uncertain times. The steady cash flow from rental income, combined with the potential for property value appreciation, positions rental properties as a reliable investment in a post-inflation world. Feeling left behind in the world of real estate? Don't worry, we've got you covered. Stay tuned for our next video, the truth about passive income streams and what actually works to uncover the secrets to effortless wealth. Make sure to hit that subscribe button. because you won't want to miss what's coming next.